Your roadmap to the latest in auto. Welcome to Highway Herald. Canada and the US have long shared a strong trade partnership, ensuring economic stability across North America. But times are shifting. With rising protectionist policies and tariff threats from the US, Canada is turning to new trade partners, especially China. The expansion of the Trans Mountain Pipeline is fueling this change, redirecting oil exports to Asia and shaking up the US energy sector. Today, we break down 7 key factors driving this transformation. Factor number 7, Canada's path to oil independence, breaking free from reliance. For decades, Canada has depended on the US as its primary oil market, sending 90% of crude exports south. This heavy reliance made Canada vulnerable to policy shifts, tariffs, and price fluctuations dictated by Washington. But that dependence is shifting, fast. The Trans Mountain Pipeline expansion, completed on May 1, 2024, boosted capacity by 590,000 barrels per day, bringing the total to 890,000 barrels daily. Now, Canada can export crude directly to global markets, reducing its dependence on US refineries. The impact? Alberta's petroleum exports to China skyrocketed to $593.13 million in just 6 months, a massive leap from previous years. While the US remains a key player, Canada's diversification strategy is a long-term power move, ensuring it controls its energy future rather than being dictated by a single trading partner. Factor number 6, China, the new oil powerhouse. China's unrelenting thirst for crude oil has solidified its position as the world's largest oil importer, averaging 11.1 million barrels per day in 2024. This growing demand has reshaped global trade patterns, and Canada is now stepping in as a key supplier. With the Trans Mountain Pipeline expansion, Canadian crude is surging westward like never before. Reports reveal that nearly half of the oil exports through Vancouver are heading to Chinese refineries. It's a strategic win for both nations. China secures a stable, high-quality crude source, while Canada diversifies away from US dependence. But this shift is bigger than just economics. Canada's pivot to China is reshaping global energy politics, strengthening diplomatic and trade ties. The US is watching closely, and they're not exactly pleased. Factor number 5, Trump's tariff gamble. Boomerang effect on US oil? US President Donald Trump's aggressive tariff policies aim to protect American industries. But could they be backfiring? His administration's tariffs on Canadian steel, aluminum, and other key commodities strained relations between the two nations. But the real bombshell dropped in February 2025 when Trump imposed a 10% tariff on Canadian oil imports. The goal? Boost US oil production. The reality? It might backfire. Higher tariffs make Canadian oil more expensive, forcing US refiners to pay more for alternative sources. The result? Soaring production costs and rising fuel prices for American consumers. Meanwhile, China and other Asian markets could swoop in, securing better deals with Canada. This miscalculation highlights the unintended consequences of protectionist policies. Instead of strengthening American energy security, they may end up fueling Canada's global energy ambitions. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now, let's explore factor number 4. Exploring alternatives, Canada's move beyond the US and China. While China is a key new partner, Canada is expanding its reach even further. With the Comprehensive Economic and Trade Agreement, CETA, in place, Canada is strengthening trade ties with the European Union. In 2024, exports to the EU surged, with energy products leading the charge. For European nations seeking to break free from Russian energy dependence, Canada offers a reliable alternative. The Trans Mountain expansion makes oil shipments to Europe more viable than ever, increasing Canada's global energy footprint. Yet, challenges persist. Longer shipping routes and refinery adjustments pose logistical hurdles since Canadian crude differs from European standards. But despite these complexities, Canada's diversification strategy ensures it won't rely on a single market. The goal? Energy independence on a global scale. Factor number 3, environmental and political roadblocks, the cost of progress. The Trans Mountain Pipeline expansion, TMX, has been one of Canada's most controversial energy projects, igniting fierce debates among environmentalists, Indigenous communities, and local governments. Proposed by Kinder Morgan in 2012, it faced intense opposition over potential oil spills, environmental destruction, and Indigenous land concerns. With the project at risk, the Canadian government stepped in, purchasing the pipeline for $4.5 billion in 2018 to ensure its completion. But what started as a rescue mission turned into a financial burden. By 2024, costs had soared to $34 billion, fueling demands for transparency on its economic and environmental impact. Despite years of hurdles, TMX officially launched on May 1, 2024, tripling capacity to 890,000 barrels per day. The project underscores Canada's ongoing struggle to balance energy ambitions with environmental and Indigenous concerns. Factor number 2, the shockwaves in U.S. energy security. For years, Canada has been the backbone of U.S. energy security, supplying over 50% of American oil imports. This tightly woven trade relationship means that any shift in Canadian exports sends shockwaves through the U.S. energy market. Now, with TMX redirecting crude oil to Asia, U.S. refineries, especially those dependent on Canadian supply, are feeling the squeeze. Losing access to affordable Canadian oil could mean higher fuel prices for American consumers, adding pressure on an already volatile market. Then there's the tariff wildcard. U.S. President Donald Trump's proposed 25% tariff on Canadian oil imports has heightened tensions, threatening U.S. refiners with rising costs. While intended to protect domestic producers, the move could backfire, forcing the U.S. to seek pricier alternatives. Will Canada's energy shift push the U.S. towards self-reliance, or will economic pressures force Washington to rethink its stance? Factor number 1, a genuine shift or a strategic chess move. Canada's shifting stance in the global energy market sparks a key question. Is this a true break from U.S. dependence, or a strategic play for leverage? With TMX unlocking new global markets, Canada is proving it has options beyond the U.S. But some analysts believe this isn't just about diversification, it's a statement. For years, the U.S. dominated energy trade negotiations, but Canada's latest moves suggest it won't play by old rules anymore. This tension extends beyond federal policy. Ontario Premier Doug Ford has even threatened to cut off energy exports to the U.S. if tariffs remain, signaling Canada's readiness to retaliate. Whether this is a genuine shift or a bluff remains debated, but one thing is clear: Canada is asserting itself, refusing to be cornered by protectionist tactics. Conclusion: the energy chess game. Who will make the next move? The Canada-U.S. energy relationship is playing out like an intense chess match, with each move reshaping the board. Canada's decision to diversify through TMX and court new markets is a calculated response to years of U.S. trade unpredictability. On the other hand, American tariffs and protectionist policies are placing new hurdles in a partnership that has historically been a cornerstone of North American energy stability. So, what does the future hold? Will economic cooperation prevail, or will both nations double down on self-interest? One thing is certain: this evolving energy standoff will have lasting implications for North America and the global oil market. What do you think? Is Canada's oil diversification a smart long-term strategy, or should it focus on repairing U.S. trade relations? Let us know your thoughts in the comments below. And before you go, don't forget to subscribe to Highway Herald so you never miss the latest updates in the world of automotive and energy news. Thanks for watching, and we'll see you in the next video.